Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is October 29th, 2024, and we're diving into Crocs' latest earnings report. Joining us is John, our senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. It's a pleasure to discuss Crocs' performance, especially given their better-than-expected third-quarter results.
Absolutely. Crocs has been a fascinating company to watch, especially with its innovative approach to casual footwear. Let's delve into their third quarter 2024 financial results. Revenue and profitability overview. Let's start with the top line. Crocs reported a net revenue of $1.6 billion for the third quarter, which is a 2% increase compared to last year. John, can you shed some light on this?
Absolutely. The revenue growth, although modest, is significant given the current market conditions. The Crocs brand itself grew by 8% on a constant currency basis, driven by balanced channel growth. This indicates strong consumer demand and effective sales strategies.
And what about profitability? The earnings per share increased by 17% to 336 cents, with adjusted EPS at 360s. What factors contributed to this?
The increase in EPS is largely due to improved gross margins, which rose to 59.6% from 55.6% last year. This margin expansion is a result of operational efficiencies and strategic cost management, allowing Crocs to enhance profitability despite a challenging environment.
Operational efficiencies and future outlook. John, let's talk about operational efficiencies. Crocs' SG&A expenses increased, yet they managed to maintain a strong operating margin of 25.4%. How did they achieve this?
Despite the 18% increase in SG&A expenses, Crocs maintained a robust operating margin by focusing on strategic investments and cost control. Their ability to leverage strong cash flow for strategic initiatives while managing expenses is commendable.
They also repaid $110 million of debt and repurchased $151 million worth of shares. How does this impact their financial health and future outlook?
These actions reflect Crocs' strong cash position and commitment to returning value to shareholders. The debt repayment reduces financial leverage, while the share repurchase indicates confidence in the company's future prospects. This positions them well for sustainable growth.
Brand performance and strategic initiatives. Let's dive into brand performance. The Crocs brand saw a revenue increase of 7.4% to $858 million, while Hey Dude experienced a decline. What's driving these trends?
The Crocs brand's success is driven by strong international growth of 15.5% and a 4.4% increase in direct-to-consumer sales. However, Hey Dude is facing challenges with a 17.4% revenue decline. The brand is undergoing strategic repositioning, which is expected to take time to yield results.
What strategic initiatives are in place to address these challenges, particularly for Hey Dude?
Crocs is focusing on enhancing brand relevance for Hey Dude through product and marketing initiatives. While the turnaround is slower than anticipated, the company remains confident in the brand's long-term potential.
Financial outlook and leadership insights. Looking ahead, Crocs has adjusted its full-year 2024 outlook. What are the key highlights from their guidance?
For the fourth quarter, Crocs expects revenues to be flat to slightly up, with the Crocs brand growing by about 2%. For the full year, they anticipate a 3% revenue growth at the lower end of prior guidance. Adjusted EPS is projected to be at the high end of their previous range, between $12.82 and $12.90.
CEO Andrew Rees expressed confidence in the company's long-term trajectory. How does this align with their current strategy?
Rees's confidence is rooted in the company's strategic investments and brand strength. Despite short-term challenges, particularly with Hey Dude, Crocs is well-positioned for sustained growth through its focus on innovation and market expansion.
Key takeaways. In summary, Crocs has delivered a solid performance in the third quarter, with notable improvements in profitability and strategic initiatives. John, any final thoughts on their investment prospects?
Crocs' strong brand performance, particularly internationally, and their strategic focus on operational efficiencies make them a compelling investment. While there are challenges, especially with Hey Dude, the company's long-term growth potential remains strong.
Thank you, John, for your insights, and thank you to our viewers for tuning in. If you found this analysis helpful, please like, share, and subscribe to Smart Stock Watch. We'd love to hear your thoughts on Crocs' performance in the comments below.